Hi everyone, welcome to Bondbed Education Series by INRBonds.com. I am Nikhil Parker and I'll be discussing about what are REITs and InvITs. REITs are the Real Estate Investment Trust and Infrastructure Investment Trust essentially has commonly the four participants. It constitutes of the trustees, the sponsors, investment managers, and project managers. The role of a trustee is to have it has to be a registered debenture trustee, and it manages the assets. All the assets through which whatever the InvIT or REIT invests into, it has to be under the name of a trustee. And coming to the sponsor, the role of a sponsor is here. It has to fund the InvIT, 25% of the InvIT, and later on they can eventually after 3 years they can hold 15%. For the first initial 3 years, they have to hold 25% of a InvIT or a REIT. The investment managers look after the investment of the assets, and the project managers look after the daily operational functionalities of a in a InvIT or a REIT. So once the InvIT or a REIT is completely formed, they come to the primary markets to raise funds, just like how an IPO happens. So once the investor buys to REIT or InvIT, just like we call in a normal IPO, we call a shareholder, but in terms of a InvIT or a REIT, we call them a unit holders because everything is calculated in terms of units. So all the money will be given to the 100% of the money will be given to the SPV, where they invest into an asset, the manager's asset. Once the money has been transferred to the SPV has to invest 80% of the funds into a cash generating asset. So in terms of REIT, they have to invest into a commercial property where it is already 80% of the commercial space has to be generating a rental yield. In terms of a infrastructure InvIT, it has to invest 80% into an infrastructure asset, be it an airport, a hospital, or a toll road or something. It has to generate its defined predictable cash flows. So once the investment is done, the cash flows, the net cash flows, inclusive of all the expenses, depreciation and everything, whatever is left out will be given to the investors of the REIT or InvIT in the form of dividends. So dividends, as per what SEBI says, is the dividends have to be paid minimum 2 quarters in a financial year. So that means, for example, if an InvIT or a REIT, just this illustration purpose only, is making 3 rupees per quarter as a dividend, and investor is getting a dividend of 3 rupees per every quarter. So if the REIT or InvIT is giving 3 rupees per every quarter in a year, that means investor would be getting 12 rupees in a financial year as a dividend income. So imagine if the IPO is at a rupees of 100 and you're getting a 12 rupees as a dividend, that means your dividend yield is 12%. So what is there for the investor who is subscribing to the REIT or InvIT is the payoff what they get is a defined dividend and the capital appreciation, the capital gains. So I'll come to this part in the later stage. So initially, this is how the payoffs or the REIT or the InvIT structure is defined. So let's go to the next slide, which talks about detailed about REITs. So an investor who is looking to invest in a REIT, what should they look for? What are the key factors they have to consider before investing into a REIT? So when the REIT invests the money into commercial space, there are several risk factors, and obviously the payoffs are also there. What are the investor need to look at? The RHP defines what are the contract of the lease, of the lease of the commercial space, and what are the type of cash flow that asset would be generating. It would be having the previous historical cash flow as well, and a forward 2-3 years of a predictable cash flow structure as well. And the investor also needs to look at the contracts. For example, in a commercial space, the leases would be having a contracts like either the rental yields will will again shoot up. I mean, in terms of they get redefined in 3 years, 2 years, 5 years. In typical lease agreement, every 3 years, they'll have around 15-20% hike in rental yields for every 3 years. So those important factors the investor should watch out for, because those factors will impact your dividend income going forward. And also the last but not the least is the quality of the promoters. So obviously, I don't have to say anything how quality promoters would work and how a bad corporate governance group of promoters would be working. So these are the most important factors for a unit holder or investor who is looking to invest into a REIT. So coming to InvIT, the investor has to look out for what are the understanding the infrastructure assets, what type of assets the SPV is investing into, and who are the sellers. For example, who is buying those end product? Because in an InvIT, in an infrastructure, the biggest problem is the liquidity. For example, I'll give an example on the power distribution company. Power distribution company selling the power to states and selling the power to a private entity. There's a lot of difference in the risk, how the cash flows will be affected. So investor has to watch out for who is the end user who is paying for the infrastructure asset products. And the second point is obviously the cash flows, what kind of cash flows it would be generating. So, and the cash flows here for InvIT would be slightly different than a REIT. In a REIT, you would be having a defined rental yield, but for a InvIT, that could be a fluctuating depending on the market sentiment. So in terms of a power grid, it depends on the current power prices and the utilizations and all. In terms of a road infra company operating a toll plaza, it depends on the traffic, how much of a traffic. For example, during the time of a lockdown, there is no road traffic at all. So these toll guys got a biggest hit. There's no cash flow at all. There is no one who's using the roads and paying the tolls. So all these important factors the investor should look at, and it's all are available in the RHP before investing. And so yeah, and the last is the quality of the promoters. What kind of promoters, what are the kind of investments they have done, and everything that's important before you're getting into a InvIT. So, but the defined, as I said, they have a defined dividend payout, but what does it make? It makes it a fixed income product or an equity product. So, but we call it's a hybrid product because it has a defined payout, just like how bonds have a frequent interest payments. They do have a dividend payments, but they also carry the equity risk, the market risk. So whenever you add a REIT or InvIT, you're adding a beta to your portfolio, the market risk, the systematic risk. So you have to understand whatever the market sentiment or the broader market, the volatility they do carry. And your portfolio also, as I said, they would be absorbing the market volatility. And so the mandatory dividend payment makes it a fixed income product. But however, you have to understand how the capital gains work out for this. For example, I'll give you a live example. The Power Grid InvIT issued at rupees 100 during the IPO. Any investor who had placed the bid for the IPO during the time of IPO and they got it. Now the InvIT is trading at 115 to 120 levels. So that means the investor already got 20% or 15 to 20% of capital gains. I mean, in terms of the capital appreciation, whatever they invested, and also the dividend income on top of it. So the investor needs to understand that in a favorable market condition, there could be a capital appreciation in terms of the spot prices of the InvIT or the REIT. In terms of a downtrend, it can work other way around. They could say capital loss. So you have to be cautious on how much you have to be cautious on the equity volatility as well. The tax, coming to the last part, the tax treatment. So any dividend income, the interest income that generated the InvIT or a REIT is taxable as per your income tax slab. and the unit holder sells the InvIT at a higher price, whatever they purchased. They should be paying the capital gains, the long-term or short-term capital gains, depending on the holding period. And the dividend payments by the SPV to the InvITs are exempted from TDS. Thanks for watching the video. Today, we have finished on the water ReITs and InvITs. Watch out for this channel for more educating our knowledgeable videos. Thank you.